Hey there, everybody. Good afternoon, good morning, good evening, depending on where you're at. I hope y'all are having a wonderful trading day. In today's session, we are going to be talking about a specific topic. Hey there, Omer. Good to see you. Which is how to stay consistent with your trading, even if you have a busy schedule. This was actually something that was asked in our little Q question box. For those of you who don't know, over at Simpler, for our essentials room, you can go ahead and pop in there and ask questions that you want to be covered in a specific session. And so this one was asked, and I am more than happy to cover it and how at least I look at staying consistent, even though I am busy uh, between work and kids and everything else. So that might be some of you guys, or perhaps some of you are more in retirement mode and you just don't want to sit in front of your computer the entire time, which I totally understand, right? You want to go out and live your life, but still be actively working on your trading and ideally growing your account, growing your money to then continue to pay for your little trips around the world or whatever else you want to, have to build your wealth. So the first thing that I would ask any of y'all, if you want to really stay consistent with your trading, is kind of what style of trader you are. And I know that might seem counterintuitive to some people, right? It's like, well, obviously, if I don't have a lot of time, I need to be a swing trader. But that's not really the case. I think that even if you don't want to spend a lot of time in front of your computer, there is still a way to be a viable trader doing things like day trading, but it's all about having the right approach. For example, I myself like to do SPX end of day pins when the market is set up for that strategy. And that involves a lot of 0 day expiration SPX. So, normally, right, you would think day trading equals sitting in front of my computer all day. But for this strategy in particular, some of you guys might be familiar with it. Normally, oh, sorry guys. Okay. Normally, I would only look to jump into the market at the last hour of market. And usually I place the trade around the last 40 minutes of market. And unless I'm planning to day trade it, which is not often for me, I usually let the strategy cash settle, then I can go about my day, right? Very limited time. I actually have to be there to kind of say, hey, what's going on? How do we, is the market set up for this strategy? Oh, it is. Okay, let's look to implement whatever strikes I want to jump into. Let's make sure the risk tolerance is there. I implement it around 240, or not 240, excuse me, 220 central, right? 40 minutes into market close, give or take. And then technically, if I'm letting it cash settle, I can walk away, right? Very limited time to still be actively working on my trading. I know there are other traders out there who like to just jump into the first hour of the day, right? They say, I can commit 1 hour to the start of market open. And that's where I look for my intraday trades. And if I make my money, great. I, lock it in and walk away. If I don't, I have my stop in place and then I still walk away. And so that's kind of the first thing I would ask you is what's your personality type, right? Are you more of an intraday style trader where you want to be in and out of trades? You want to hold your capital the majority of the time overnight in your account? Or are you more of a swing trader, right? You like to look at the gradual trend of things, which in that case, once again, all this is about trying to find the time commitment for yourself. So let's talk about maybe you're more an overnight trader. This is actually a setup I am eyeing right now for my $500 challenge account. For those of you who don't know what that is, it is a challenge I put on throughout the month. I start the month with $500 in one account, and it's to help teach people that you don't need Warren Buffett size accounts in order to trade and grow it successfully. And it's also, more importantly, to help teach people about risk, because if you can be mindful of risk and a very small account with only $500 of capital, then it's easier to then build yourself up, in my opinion, to larger size accounts, right? And having that grasp and understanding on risk so that ideally you're not blowing out the savings and the money that you worked so hard to get to begin with. And so, um, the next question would be, are you more an overnight trader, right? Maybe you do like the shorter aspect of things, but you don't necessarily like your capital still being tied up in long-term trade ideas. For myself, one of the strategies I use is the overnight profit strategy, which involves the divergent bar. And so, like I said, I'm actually eyeing this MNST monster trade for a potential $500 challenge trade. And so what do I do here? Even though I am, very busy throughout my day, I'm dealing with kids. How do I make this strategy work for me? Well, typically, right, at some point in the market day, I do a scan and I scan for bullish and bearish divergent bars, right? So I have a scanner with this indicator. And so I'll just, go about doing my scan. Usually I like to do the scan more midday to closer into the close just to make sure whatever I'm looking for has a valid setup, right? I don't want it to erase partway through the day. I'll compile a small list of symbols that I think look good, right? And usually the scan doesn't take very long, especially the more often you do it, right? The more often you kind of see charts and you've been trading, usually it only takes a glimpse to say, "Oh, this looks valid," or "Oh, no, this doesn't have enough agreement. I'm not wasting my money on this setup." And so you can get through a scan, in about 30 minutes compiling a list of symbols that you might want to consider looking at. And then from there, personally, from this strategy for me, I'll jump back in maybe the last hour, last 30 minutes of market after that, and then recheck those symbols, right? Are all of these symbols still valid on the scan? And if they are, then I'll go ahead and implement the ones I want to, right? Jump into those trades. And then I set little alerts for myself. So, for example, on this bearish divergent bar that printed yesterday, it is still valid for my 3-bar rule. And so what I would do, and what I will do if this still looks good into the close today, meaning it doesn't break above the 10 period simple, is I will look to put on a short-term bearish trade idea. And I will look for the underlying price to go back to or below the low of yesterday's bar, which is 53.55. So what I'll do is, and I can do this now, right? I will set an alert here and I will set it for 53.55. This way, if tomorrow I'm going about my day, right? I'm busy with the kids or I'm doing something else, and all of a sudden this alert pings on my phone, or maybe I'm wearing my headset around the house and I hear it ping, then it tells me to go ahead and take a look at my trade and to consider taking action on closing it out, right? Because the signal has followed through. You can, of course, also look to just set yourself up with a specific profit target and see if it takes. You can also set yourself up with an alert to say, hey, if it gets above this level, that's my stop. I'm closing out the trade. Um, but I find alerts can be one of your best friends if you are busy and not actively staring at your charts throughout the market day, uh, like is the case for me half of the time I'm trading, because I'm busy with other stuff. So I'll set the alert here. I'll open the trade later today into the close, like I said, if everything still looks good. And then I'll go about my day tomorrow. And if it pings me right at open, great. Then I'm out right at open. If it doesn't ping me till later in the day, that's fine. But as long as I have my phone accessible, as long as I can get that alert to tell me when, the target has occurred or maybe the stop has occurred, then I can go ahead and take that action. If you are more of a longer term trader, right? You're like, Allison, overnight trades, day trading, that all sounds great, but that moves way too fast for my style. I like to be slow and steady. I maybe want to look at my charts once a week, even, and not really have to worry about things, set it and forget it. That's fine, right? You know your personality type. And so if you want to be a bit more consistent with that, one of the things I have looked to do in a class that Cody and I taught recently is look for true low setups in line with dark pools. Now, once again, it's all about finding the time to do a scan. And to be honest, guys, you know, scans, in my opinion, is part of the nature of trading. You got to do your homework, right? You got to go and figure out what is actually getting the setup before you can implement it. So, for example, Apple's one of the ones that I've been watching Doesn't look too good today, right? But what I did is it has some true low prints on even the longer time frames of the monthly charts. Let me pull this up. So it has true low prints that are happening on a longer time frame. We have had dark pool levels come in at this price that currently look like buying, but obviously still up in the air. We'll see. But because of the setup, because I like how the 30 period simple is holding on the monthly, right? It has that monthly true low. Those don't print very often. It's printed maybe about 5 times roughly in the past. All of those times it printed were good buy-in spots for long-term holds. And so I bought in a share, right? I jumped in a share to my kid's account at this level. And so now all I have to do is sit back and wait. I have a stop in place for myself. If it gets below 165, I'm out, right? And for myself personally on stops, I look not only necessarily for the break, but the close below that level. So if it breaks 165 and closes below it, I'm out of the trade. Worst case is it starts to bounce back up, right? It continues to hold, and then I can look to re-engage. But that currently is where my stop is at, right? And this is definitely for longer term swing setups, more portfolio building. Maybe those of you with 401k accounts, right? Retirement accounts, this is maybe kind of more your jam. And so you look to do that. And let's say Apple decides to move higher, right? Let's say it moves up to 200 and it's looking good, everything's valid. Well, then what will I do? Well, I'll move up my stop, right? I think it's always a good idea on longer term trades like this to move it up with the price. That way, let's say we're at 200 and then all of a sudden some really bad news comes out about Apple. Congress isn't happy with them. They're back failing on iPhone sales, whatever, discourse you want to put out there. And it falters, right? It drops back down. Well, now my stop, if it gets triggered, still allows for a profit, right? Because I moved it up as the overall underlying price was moving up with it. And then, of course, there are other ways you can trade shares like covered calls, things like that. But in the most basic terms, if you don't want to be sitting here in front of your computer very often, if you want to overall still see that equity curve go from bottom left to top right for your account and see that growth, then this to me has been one of the easier ways to do that in the sense of I don't have to commit that much time. I commit a little bit of time to doing some scans on the true low. Once I have those symbols collected, I'll compare it with dark pool prints. And if the dark pool prints are coming in at or below the range of where the true low was, right, then that looks like institutions are buying. They're seeing the same sale price. And so I'll jump in and play with the big fish, right, in the same direction. I'm not fighting against it. And then that way, I maybe do that once a week, in regards to the share aspect. And then I sit tight and hold, right? And I have, once again, alert set up to let me know, hey, it's starting to falter one way or it's starting to break a certain way. And then I'll take action accordingly. Um, and so to me, it's all just once again goes back to how do you like trading, right? What fits your personality type best? What fits your schedule best? And then deciding from there how much time you can commit each day or each week to the market in order to try and grow your account successfully. Because you can trade even with a busy schedule, right? I am a perfect example of being able to do that and still being consistent. But it's understanding what personality type you have and then committing to the time to it. It's easy for traders to tell themselves like, yeah, I definitely want to trade, but then all of a sudden they're like, right, I rather not do this. It's like when you get homework at school. It's like I could do my homework or I could go hang out with my friends. And it's like that's great, right? I am all for hanging out with friends. But if you want to see the outcome that you're looking for, you do have to put in some work. And so you have to find the time when you can put in that work. And for some people, they can't do it during the week. They're busy with jobs. They're out doing other things. They're busy maybe taking care of their elderly parents, anything else. And so they only have time on the weekend to actually do any of that work. That's fine. Then that means that probably something on the longer term swing trade side works for you. Do the scans, look for the setups. Monday morning comes around, you jump in the trade, or whatever day you want to choose to jump in on throughout the market week. But then you take a little bit of time, right? Maybe 10 to 30 minutes during that week when the market's open to actually execute on jumping into the entry. And then you set alerts, right? Or you set uh, you know, cancel orders or target orders, or however you want to do it. I personally like alerts because in that way it tells me to look at the chart before the market makers actually execute on any sort of action. I have found personally, whenever I put stop loss orders out there on the option side of thing, it oftentimes feels like the market makers come down and grab the stop, and then the chart pattern's still accurate and the underlying price moves back around to where that trade idea would have been a profit. So for myself, I personally am not a fan of stop losses, but I'll use things like alerts to tell me, hey, it's triggering a level you didn't want to see break. Take a look at the trade, and then I can take a look at the chart. I can take a look at the trade, and then make that decision of, okay, yeah, no, I should probably cut this and protect capital, or it's still holding in there. Let's set a new alert. We'll keep an eye on it still, and then I'll go about my day. Um, and so I hope that kind of answers. If you have any questions around that or how I do that, let me know. But it's all, just trying to find and understanding the time commitment. And the last thing I'll do to that before answering questions is, let's say you are more of a day trader. Well, not every market day is going to necessarily give you an opportunity to day trade, right? We have seen mornings that are very flat and non eventful. And maybe you're more of a directional day trader like myself. Well, if that's the case, then you don't trade that day, right? You preserve capital and you go to the next day. You don't necessarily have to force a trade every day in order to make trading work for you. I think that's one of the biggest misconceptions, especially around day trading, is people feel the need to place a trade, right? They see the money in their account. They're like, I have to do something today. I have to make, a certain percentage each day in order for this to work. And you're going to have days where you lose. You're going to have days that are exceedingly better, right? And so instead of, coming into a day where there's not really a setup for you to take a day trade, don't force it, right? Because that's probably going to end up in a loss. Instead, save the capital and wait for that cleaner setup, and then put it in there and, look for the potential double instead. So, uh, and Kita, I apologize if I butchered your name, but they're asking, do you only buy when the true low is printed? Not always. So that's a very good question. The true low signal will uh, pop up whenever everything on the indicator is valid, right? Whenever everything is valid for it to create the signal will appear. So, for example, on Apple, this is showing up for this month. Now, it's not the end of the month yet, right? If Apple all of a sudden comes out with really great news, the market loves, and it really pop from here, it might actually cancel the true low discount price signal, right? Because all of a sudden it's trading at 200, and that's not looking like a discount price anymore when it's up at that level. So, like I mentioned, for Apple, I actually took this trade in one of my accounts. I'm in, like I said, a share on my kid's account where I'm looking for that longer term growth. So hopefully when they're older, I can either cash out of the account or split it between them, right? If they still want to hold the shares, and give them a little nest egg to go off off into the sunset with their own journey in life, if you will. And so I saw this setup. I liked it. I like how it's looking. So I told myself, okay, I'm willing to jump in early. But like I said, I also have that stop. So if Apple really starts to break down, it's a quick cut. I'm not going to lose that much money on it. And I can always look to take that capital and move it back either into Apple whenever it's giving me a better setup again, or just onto a new trade idea. So, no, I don't always jump in when it's printed. Obviously, I prefer when it prints, right? Because it remains valid. The only thing I would say with that is the true low, I personally usually pair with the Bollinger Bands. So if it's flashing on, but the Bollinger Bands are flaring open, that's a no-go for me. I need to see the Bollinger Bands flat or even coming up towards the price for it to be a bit more of a valid signal. Let's go back in time really quick, just so you can take a look at, like here, for example. This isn't as dramatic. It's more dramatic on like a weekly chart. But here, for example, in 2008 to 2009, when a lot of things were getting this true low signal due to the sell-off, Bollinger Bands were starting to flare open. So I would personally wait for them to flatten out. Now, why do I wait for that? Well, usually when they flatten out, if the signal is still valid or recently printed, then I know I'm still getting in for a good price, but I'm not having to sit through any more downward pain, right? And what do I mean by that? Well, it might mean I'm not in for the 95% off, right? The best deal, if you will, but I'm in for still a 50% off while everything's moving up. Instead of maybe jumping in here, knowing that the Bollinger Bands are starting to open up and it's 50% off, but then I'm having to sit through pain of it continuing to go down before the bounce and having to sit through that pain to the downside. Not only, does it look bad in your account with it being red, but it's an emotional pain, right? And trading, as much as traders don't necessarily like to believe it, or, people don't, it's definitely, there's a lot of psychology behind it. And so you have to ask yourself, am I going to feel comfortable sitting through this continuing to sell off and still hold this trade idea looking for the follow through? And to myself, no, right? That I already know the answer to that. I do not want to see, jump in too soon and then have it continue to sell off on me. That is not going to be good for my emotional side. I'm going to start to get very antsy about it. I'll probably make an emotional decision rather than a rational one based off the technicals. And usually, right, that more than likely will lead to losses in my account rather than, profits when I stay more even keel, if you will, on my emotions. And so that's part of the reason why I wait for them to flatten out, because even if it's not quote unquote the best discount price, I'm fine with that because I know I'm still one getting a good deal, right? Apple's never come back down to this level since. This was a great discount buy. And two, I know the likelihood of me sitting through the bounce that's already starting to occur is pretty strong, right? So I don't have to worry about that. So that's the only thing I would, make note of is I don't mind jumping in when it's, you know, printing but hasn't technically printed yet because it's not the close of the bar yet. But, it's not like a divergent bar in that case. But um I do need that qualification from the Bollinger Bands if I'm jumping in early. So like here, for example, even though the Bollinger Bands are way down here, they're flat. So I say, okay, right, this to me is a valid entry point. It matches all of the rules I have around trading with the true low, but I still have a stop and play, right? I'm not silly in the sense of I'll just let this go and sit through a stronger pullback. No, right? I have a stop and play based off of daily price levels. And I told myself if it breaks this, then I'm closing out and I'll, put it back on my watch list and watch for a potential better entry. And maybe I need to move this a little bit lower because we have recently switched the ATR trailing stop from resistance to support with this recent break to the upside. So I might need to move my stop a little lower to be in line with this technical. But that's kind of the idea. If it really starts to break here, then the daily chart's likely rolling over into a stronger bearish trend. And I don't want to have to sit through that pain. So yeah, and absolutely we can scan for stocks with true lows. Let's go ahead and pull up the scanner. Happy to do that. Does anyone else have any questions first around um, being consistent on a busy schedule with trading and understanding that it's just, dedicating basically the time to either do the scans or the time to intraday trade and then doing it accordingly? Let me know. But otherwise, I'm more than happy to do some scans right now. And let's go ahead and we'll scan the NASDAQ. Though that might not be the best. Actually, let's scan the S&P. Sorry guys, it's working a little slow. I'll bring up the scanner as soon as I get it set up. But we'll bring up the S&P 100. And then I'm actually going to go to a monthly time frame. And we will scan for some true lows. I haven't pulled it over yet. I'm still literally waiting for every for it to load up here. So give me 1 second. It's like molasses trying to get the settings all set up because I was actually scanning for divergent bars here earlier. So here's the scan. This is scanning for, yeah, I knew it was going to do that. Scanning for any sort of true low within the last 5 bars to be valid. Okay, that's the opposite of what I'm asking you to do, Thinkorswim. There we go. And then we will change this to a monthly. You can see how long this is. So I feel like half the time in here is going to be set for this. Okay, there we go. And then let's scan. Let's see what pops up. I know something has to pop up because obviously Apple's on the list for monthly. Maybe I need to close out of my intraday charts. Oh, there we go. So 155 different symbols. And usually I sort my scans by volume because I like to know what's the most liquid thing to trade going into the least liquid thing. Oh, so let's re-hit that. That's the least liquid. Let's go to the most. Something triggered on my alerts, but it's probably McDonald's, which I'm already out of. So the first thing that popped up is Tesla. So let's go over to the monthly time frame and we'll go to Tesla. Now, personally, I already know what this chart looks like. I am not jumping into it yet, but I'll ask you guys the question of why I'm not jumping into it and see if you guys can get the right answer. So does anyone know why I'm waiting on maybe jumping into Tesla as of right now? So the reason why is because of the Bollinger Bands, right? The Bollinger Bands are opening lower on the monthly chart. So if this is going to continue to sell off, maybe it's trying to head down to the monthly 100 period simple moving average before it stalls. I don't want to have to sit through any more of that pain. I rather wait for it to get down into that range, start to flatten out, and then that tells me when a good discount price is. And that's of course exactly the Bollinger Bands. And that's only if you want to be buying into Tesla. Part of me is a little suspect of the electrical car space at this point, but that's just my own 2 cents. But if you like Tesla, you're a believer in the company and everything else, this here is still telling me to be patient because from a monthly perspective, with the Bollinger Bands the way they are, with room down into support, there's actually a little room on momentum. All of this is just telling me to wait. It's not to say I can't buy in now and that this still might not be a discount price, right? Back here, for example, we were starting to see it flare open. We started to get the true lows, and arguably if you had jumped in here basically on the bar that created the cherry on top, you would have been able to play for the bounce. But I rather wait for it to flatten to have that confirmation that it is, starting to identify that bottom before playing for the bounce back up. So that's Tesla. Let's go on. Bank of America is next. Now, Bank of America, I do not trade because my mom works there, and at least last I checked, she worked at she's had a lot of different jobs at Bank of America over the years, But the last I checked, she worked at a part of the company where I know my dad had issues with trading and rules. And I know I don't technically live in the house, but I don't need the SEC coming at me pretending I'm, insider trading when I'm clearly not. So I don't touch this one for that reason. But you can see here, we've had recent true lows printing really from last year. Had the Bollinger Bands flare open for some. Now they've started to flatten out. So back in here, not a bad discount price. Obviously, it's run up into resistance. It's starting to falter. So you might see if it comes back down into that support level again. The last time we printed true lows on Bank of America on a monthly time frame, right, was way back here. And once again, a great example. Notice how the Bollinger Bands were flaring open. If you had jumped in, right, as these first signals started to print on a monthly, you would have had to sit through all this pain to the downside. And arguably, the price has come back into that range, right? We did hear off the highs, but who wants to wait for, you know, almost 15 years or so to see the price get back to break even? Not me, right? I rather wait the bottom to start to be identified. So I would have waited for it to flatten out here. Might have had to sit through a bit more pain, could have re-upped here, right? But then obviously a lot easier to play for that trend move. And of course, at least as of right now, right, the price has not come back down to these levels, right? We've been trading higher since then. So that's part of the reason I like to wait for the Bollinger Bands to start to flatten out before trying to buy in like that. Apple, we've already looked at. Let's go over to 4. Oh, Steve was at Powell. He was talking. Oh, we had a little bit of a blip down. Bounced right back up, though. We'll see if it tries to bleed lower. Intraday charts are flat. And of course, that kind of goes back for those of you who prefer intraday trading, right? And still don't want to spend all day in front of your computer. You can, do things like trading the first hour, trading the last hour of market. But of course, be mindful of when it's Fed day, right? When, hikes or cuts are being released, when Powell's going to get on the mic and talk, because those can be pretty volatile days. So maybe you choose to trade those days in the afternoon, or that's, the one day that you're actually going to commit a month to sitting in front of your computer looking for those intraday setups because of how the volatility works on those days the majority of the time. Mike just called me Han Solo, right? I'll just evade everybody. Evade Jabba the Hutt. So Ford here, Ford has had recent true lows in this consolidated range. We're still kind of in this consolidation. I do like that it's holding the 100. Still pretty flat, but once again, great contender for shares, right? Especially if we have dark pool prints coming in here, which I'm not even going to try and load that with how slow my computer's being right now. I rather just, if you guys have taken the class thing, you know what to look for. But if we do see, right, the big boys, the hedge funds, if you will, big money coming in at this level too, and they're buying in shares at this range, then this is probably a good contender for shares because it's easy on shares to sit through this noise, right? Because you don't have to worry about theta decay like you would on options. And then you just have a stop in place. So for myself, for example, if I actually do hold forward in a different account over on Moomoo, but if I was wanting to put more into Ford, I would jump in here and my line in the sand would probably be right around $10, maybe 9.95, right? A little bit below 10. That way, if it really starts to break that level, I know it's breaking to the downside of this consolidation. Probably not something I want to be in, right? So I'll take my capital back and go to a new trade. Um, and then if it holds here, if it stays flat, you can always, especially if you have a lot of shares on this, right? As long as you have at least 100 shares on a symbol, you can do covered calls. Covered calls is a great strategy to, bring income into your account while still holding the shares for the bigger long-term investment move. So Ford, I would argue, depending on what the premium on the options is, would be a great contender for covered calls right now because we're basically just staying put in a range. So if you have 100 shares of Ford, you could go slightly out of the money, give yourself some time, but start to sell short strikes for the premium crush. And then if it looks like it's going to finally start to break to the upside out of this consolidation, you close out your shorts and play the shares. But as soon as it looks like it's going back into chop or you're concerned about a reversal, you can go back to doing covered calls, right? Make that short term income while it hangs out. And sometimes, even for those of you not familiar with covered calls, depending on what the share price is versus the premium you're selling, it's not out of the question to where eventually the premium that you took on those shorts, right, that you sold against your shares, um, end up paying for the shares themselves. Right. Now, that all depends, of course, on the underlying price, the premium you're getting. But I've certainly seen it happen before where you can have basically the covered calls end up paying for the shares that you're holding longer term. Um, so, yeah. So, you know, another great strategy, something that, once again, you really don't have to sit in front of your computer on as long as you have a proper trading plan. And I would say to everybody, if you do not have a trading journal, please consider keeping one, uh, because you're not always going to be in the same market environment. It's just the market fluctuates, right? 2022 was a very bearish, volatile year. 2023, we had a bit of chop and then it turned bullish. And then certainly this year, that bullish aspect has really continued. And so knowing the different market environments will dictate more than likely the different strategies you might consider implementing. So, like for myself in 2022, naturally I'm more a day trader at heart and stuff, but 2022 was a great year for me to be in and out of trades, not really looking at swing trades, certainly not looking at the true lows unless it was on a longer time frame, trying to prep for the bottom, if you will, to buy in at. I was, doing a lot of end of day pins. So the majority of my time, I was doing other strategies too, but for example's sakes, let's say I wasn't, right, I was busy throughout the day. Well, 2022 was a great year for the end of day pin strategy. So I'm going to commit the last hour of market to be doing my trading because that's the strategies that's working. As soon as that market environment started to switch, right? And I made note of that in my trading journal because I could see it by taking notes and seeing, the SPX lotto trades that used to feel like we were printing money, wasn't doing that as often. So that told me, oh, I'm in a different market environment. I need to put that tool back in my toolbox and then find a strategy that works. And maybe, in 2023, because obviously the market was starting to bounce back up, that was probably a good time to start implementing the true low strategy, right? Finding the discount price and playing it that way. So American Airlines, here's another one. This was printing true lows all throughout this downturn. Now we're starting to see Bollinger Bands finally flatten out. Still have the valid true low. You have a monthly squeeze. Now, I'm not a fan of the bearish sentiment on this chart, but once again, it doesn't mean you couldn't jump in. I'd almost treat this similar to Ford, where $10 would probably be my line in the sand. As long as it doesn't break below that, I would hold the shares. If it's staying in consolidation, I'd look to do covered calls. And then if it starts to break above the resistance levels, stop doing covered calls and let the shares start to work out. I will say the other thing to be mindful of too when trading the true lows is make sure you're doing a company, especially if you're doing like the share longer term aspect. Make sure it's a company you believe in, right? So for myself, I don't even really want to consider Pfizer. And it's not to say I won't trade pharmaceutical companies or anything like that. I love actually trading Lilly the majority of the time. But Pfizer has so much stuff around the COVID vaccines with it, where they had a lot of hype during COVID when the vaccine started to come out. And it just feels like they've fallen apart. And at least, correct me if I'm wrong, y'all, but I haven't seen anything come out about, Pfizer hopping on the new wave, which seems to be the weight loss drugs, right? That's that's the new pharmaceutical drug of choice that everyone's talking about, if you will. Whereas Eli Lilly, I think, does a much better job at pivoting what they're looking at. So they, of course, had their COVID drug, for example, but now they're getting into the weight loss thing. And they're a little bit more spread out in regard to their products to where That I would be considered uh, trying to find a true low setup on. One second. Sorry, guys. She was asleep in my arm and clearly did not like the way she woke up. I feel you like the pins. They worked out great for you. Excellent. I love it. Yeah, no, the pin trades have been a lot of fun. I actually, the past week, those have been actually working out. Past week or two, they've been working out pretty well. So I'm hoping that if we, stay within the market environment, I can start alerting those out again. We'll see, right? We'll see. But yeah, they've been working well for me. But guys, I realize I'm past time, so I will go before she gets too fussy on me. But I hope that gives you guys an idea of how you can trade consistently, even if you can't, be in front of your computer all day, every day. And honestly, I mean, unless you like doing that, right? Which I do on days when I'm not, too busy. I like sitting in front of my computer and watching the charts and trading and, going from day trading to swing trading and scanning and things like that. But you really don't have to with trading, right? It's all about finding just the time you want to dedicate to trading and then being there for it, right? Doing your homework on the scans, making sure you have the prep work available, and then going ahead and implementing on whatever that trading plan is for yourself. So, Mike, she needs to read first, right? Before she can start journaling. But thank you guys so much for joining me today. If you have any other follow up questions, please let me know. Or if you have another topic that you want to discuss on one of these curated sessions, feel free to write into Simpler, and one of us traders will be more than happy to do a video topic around it. But as always, my fellow Jedis, may the trade be with you, and I look forward to talking to you next time. And for those of you following the $500 challenge, if Monster still looks good, don't be surprised if I send out an alert around that. So have a good day, guys. Bye.